So as a business consultant, I end up getting asked a lot of the same questions over and over and over and over. So instead of constantly typing out the same email or copy and pasting the same Word doc, what we decided to do is create a series of videos to answer the most common questions that we get from our clients and possibly share them with other business owners who may not even have thought to ask these questions yet, but will most certainly ask them at some point in the future. So we've decided to get on our white leather couch here in the office and put together a series. Hope you enjoy them. This is From the White Couch. You know, charitable contributions are an issue that comes up quite a bit. First of all, let me say I'm not a tax preparer. I was for 10 years, but we don't do any actual tax work now, but we do work very closely with a CPA firm that does a lot of our clients' tax returns. And one of the things that everybody assumes is, well, if I just give money to charity, I can deduct it on my taxes, so I'm going to go ahead and do that. And that's not to say it's not true. That is, in general, true. But what you need to keep in mind are two things. Number one, charitable contributions that are made by your company are not necessarily deductible by your company. Now, that's a little bit of semantics. It ends up coming to you personally and you can deduct them on your personal tax return, but it's limited. There are certain limitations that you'll want to check with your personal tax preparer on before you go ahead and start making a bunch of contributions. So it is deductible, but number one, it's limited. Number two, more importantly, a lot of new business owners will ask me, hey, I've got some income and I'd like to give some money to a charity so that I'd rather give it to the charity than give it to the government. And it's an admirable goal, and a lot of times it's something that can work. But if you're just getting started out in business and you're younger, a lot of times you might not have a lot of what they call itemized deductions. Generally, that would be home mortgage interest is the biggest one, property taxes, things of that nature. So if you don't own your own home, if you're renting and you want to give charitable contributions, not only are you going to be limited as to the total amount of contributions that can be deductible, but you're also going to be limited to the fact that you have to get over and above a standard deduction before you can start to deduct your charitable contributions. So if you're single and you don't own a home, your only itemized deduction, generally speaking, would be either sales taxes or income taxes that you paid to your state. So let's say that you paid $1,000 in income tax to your state, and the standard deduction is $5,000. So that means in order to get above the standard deduction, you have to give at least $4,000 to a charity just to get you to that point. And then anything over that $4,000 would actually be taxable, a tax benefit to you. So I know that's kind of a convoluted way of saying it, but if you're giving to charity purely because of the tax consequences, you definitely want to check with your tax preparer first to make sure that you're going to get the benefit for it. Now, if you're giving to charity just because you love the charity, then by all means, go ahead and do that. That's your prerogative, and I would never discourage it. But if it's tax savings that are your motivation, you definitely want to make sure you check and you're over both of those hurdles before you start cutting checks. So thanks for watching. If you have any questions that you would like to have answered on a future segment of From the White Couch, hit us up on Twitter or on our website. On Twitter, use the hashtag AskCap3 or From the White Couch. You can hit us up on Facebook as well, or even Snapchat us once our Snapchat is up and running. Thank you.